Hello to everybody, our dear subscribers. FutureTrend channel welcomes all of you today. For the date of 8th of July 2019, we are ready to present our point of view, our vision of how to trade not only major currencies but some part of other currencies. Among them, we will shortly discuss euro crosses, commodity block of currencies, and probably some types of exotic currencies. First of all, ladies and gentlemen, let's discuss a little bit a fundamental picture of, let's discuss a fundamental background of today's foreign exchange market. Of course, basing on the last report from the United States, so-called payrolls report, probably most important economic indicator of the United States economy. Of course, the market more or less was prepared for the weaker numbers, and of course it's not a surprise that the United States dollar reacted to the higher side after the absolute numbers of created jobs in the United States surprised to the upside. But of course, if we look at the all numbers of the payrolls report, not all of them were positive for the United States currency. First of all, unemployment rate ticked higher, average hourly earnings ticked lower compared to expectations, and of course it does not bode well for the United States currency. But again, the market now was anticipating a kind of half a point cut at the next meeting of the Fed, and now of course the market suggests that probably we could expect only a quarter point rate cut at the next meeting of the Federal Open Market Committee. And of course, from that point of view, it's normal, it's logical to see the United States dollar higher. Let's see now the technical picture, because there is some changes in our portfolio. First of all, we entered a small long position in the euro currency, in the euro dollar, and were stopped out at 112.30. Now we suggest to wait a little bit to see how the situation will further develop in the coming hours. Let's see the chart of the euro dollar. First of all, we should understand that now we are below 112.50, which is important barrier at the moment. Important barrier, it's a former support line of 112.50.60, and now it's the broken uptrend line. Of course, from that point of view that we are trading below 120.50, we should further develop our bearish picture to the downside. But once again, we should understand also that not everything is so good in the United States right now. Also taking into account the situation with United States-China trading agreement, political instability, political desire of the Donald Trump to move Jerome Powell from the position of the Fed's chief, and of course it should further shake the ground of the independence of the Fed, and in case of further exploding of this kind of situation, of course it should not bode well for the United States currency. We should understand that. And also we should understand that from technical point of view, the euro currency should break and close on the daily chart below 111 to further improve its bearish picture. At the moment, let's see the daily chart. We should read the euro dollar more or less neutrally at the moment. As regarding some other types of the currency, we are seeing at the moment that of course is 111.10. 111 is a kind of strong support barrier. We also should understand that last week we broke above moving average 200 daily line, but now we are once again below that level, and of course it's not a good from the bullish engulfing pattern, let's say so. And of course we should wait, because there is a longer kind of downtrend line located around 115, and at the moment probably it's a pivotal point between the upside and the downside in the longer term prospects of the euro currency. So now we once again we are ready to buy a dip in the euro dollar in case of further moving closer to the important level of 111. But once again we are prepared to stand aside from the market of the euro dollar, probably because the trading now he is absolutely range bound. Let's say 111 is the lower side of this bound, and to say the truth 114, 115 is the higher side. As regarding dollar yen, here you can ask us why we don't close our position at the promised level of 108.55. First of all, because we never closed on above that line, above that level on the daily basis. That's why we prefer to resell our position, and now prefer to stand with our bearish point of view. If we look at the daily chart in the dollar yen, here the situation is, as we suggest, more or less negative while we are trading below 109. That's why we moved our stop loss to that level and continue to suggest that sooner or later we could test the so-called uptrend line in the currency located today at 105.90. That's why we will use an opportunity of undershooting of the level of 106 to close our position. As regarding the cable, here the situation is absolutely the same. We never closed on the daily basis below 125. We found a kind of new support level at 124.80, and now we prefer to stand with our aggregate long position in the currency, of course a risky one, with an average price of 126. In case of breaking on the closing basis below 125, of course we should need to close our a long position. But once again the situation now is in favor of further upside in the United States currency before we seeing a kind of another part of dismal economic numbers from the United States before the next Federal Open Market Committee meeting, because only that could improve the bearish pattern of the United States currency. As regarding dollar Swiss, here the situation is the same, because as you know we have a stop at 0.9930, but once again we never closed on the daily basis above that line, because on a daily closing was 99.15, and that's why we still keep our short position in the currency. But again the situation now is not in our favor, and we should acknowledge that. Euro crosses, it's there is not any kind of special kind of words to characterize the euro crosses. That's why because it's more or less at the same levels as before. As regarding commodity block of currencies, here we have just one small position in the Aussie dollar. Let's see the chart in the Aussie dollar, and you can find that there is improved support level around 69.50, and probably you could put your stop loss here around 69.50, 55. Because here is a kind of technical support in the Aussie dollar, and we continue to suggest that not everything is so bad in the Australian economy. First of all, Probably only one fact could really deteriorate the situation with the bull position in this type of currency, and that the situation between the United States and China regarding its future trading relations. And of course it does not bode well for the Australian economy, because we should understand how ties economic Chinese one with the Australian resource, let's say resource provider for the Chinese economy. Anyway, if we look at the daily chart in the Aussie dollar, there is a really important technical barrier of 0.7094 where lies moving average 200 daily line three times tested since December of last year, let's say for the last half a year, but once again let's say unsuccessful. It was such a kind of testing was unsuccessful because we never closed above that moving average 200 daily line on the closing basis, and from that point of view the Aussie dollar should continue to trace further to the downside. But anyway, once again we suggest that now it's time to buy the Aussie dollar, because sooner or later, of course, as we suppose the United States dollar should weaken. And finally, a few words about exotic currencies. Here we have two interesting positions. First of all, a long position in the Turkey lira, let's say in the dollar Turkey lira. And here really it's interesting. First of all, there is a gap to the upside, and we suggest that now time is to develop further to the upside till the level of 5.85 where lies a kind of immediate downtrend line, and where we will try to close our position. But once again, last week we tested moving average 200 daily line located at 558 where lies by the way our stop loss. We never closed below it. We never closed this stop loss level, and that's why we still keep our long position in the currency. But once again we suggest now to be cautious with long dollar positions, even in these types of currencies like dollar against South African rand or dollar lira, or for example even the dollar SEK, where by the way now we enter a short dollar position on a testing of immediate type of downtrend line. We entered the position at 9.45. We put a stop above 9.47, but we will try to enter another short position on the possible retest of the resistance barrier located at 9.55. We suggest that it's time probably for the U-turn of the current bullish picture, of the bullish trend in this type of currency that started in February last year. Now probably it's time to sell the currency, because a strong move below moving average 200 daily line located today around 9.22 should further take the currency further to the downside. This is our primary idea now regarding the trading and the dollar against Swedish crown. Thank you, ladies and gentlemen, for all of your efforts to stimulate our channel. Thank you for all of your comments and likes. We wish you a pleasant start of trading this week. Take care and bye bye. For now, it was your FutureTrend channel.